There you go. Cool. All
Got it.
right, let's
Cool.
continue.
What
What
is
is
the other term for the cash payment settlement option? Proceeds, principal amount, face amount, lump sum. Wait a minute. For settlement option.
what is the term used for cash settlement options? Principal paid as lump sum. Proceeds?
That's what I was thinking.
No. Lump sum. Cash payment. Yes, of course. Okay, I messed up here. So cash payment is gonna be lump sum because you want your money in cash, so you want a lump sum. Get it?
Right.
Yeah, my bad there.
Every time I'm thinking cash, I want my son. I want my money now. Which of the following is true about non-forfeiture values? Lifeguards do not have the authority to decide how to exercise non-forfeiture values. A table showing non-forfeiture values for the next 10 years must be included in the policy. They are required by state law to be included in the policy. They are optional provisions. So the following is true about non-forfeiture values. They are optional provisions. They're required by state laws to be included in the policy.
I don't know.
I'm not sure about this one.
Yeah, me neither. There it
They're
is.
required by
Answers.
state law. And I was going to say that one. I was like, well, it's the state.
Yeah.
That was just going to be my guess.
So let's see. Non-forfeiture values are required by state law to be included in the policy and cannot be altered by the policy owner. A table showing the non-forfeiture values for the next 20 years must be included in the policy. Got it. All right. They're required by law.
First two terms are associated directly with the premium. Renewable, convertible, level, flexible, fixed, variable, term, or permanent.
That
Mhm.
one. Level or flexible.
Yeah. See, remember earlier when I said I had a question like that and it flipped me up? It was like one like this. Yes, a level and flexible.
Yeah.
Yeah.
Yeah, this one does seem tricky. But just think of this level term, flexible
Mm.
premium. You see what I mean? Flexible premium,
Yeah.
level term. There's a universal life policies are also known as flexible premium adjustable life. So it's either going to be fixed, not fixed, I mean level or flexible. And
Okay.
C, I could see how C would mess up a lot of people, because it's either
Fixed and variable, right? Because that's what threw me. Like I was gonna say B, and then I was like, I don't know C.
But when you see fixed or variable, it's talking about the interest rate that you're getting. Is the interest rate fixed or is the interest rate variable?
Okay,
So
so anytime I see interest rate, fixed or variable.
yeah.
A 40-year-old man has a whole life policy and names his wife as his only beneficiary. His wife dies 10 years later. He never remarries and dies at age 61, leaving two grown up children. Assuming he never changed the beneficiary, the policy proceeds will go to his estate. First insured by child, borrow children who is equally capitalized, the insurance company. Yeah, his estate. If he never updated it, it'd be his estate because his beneficiary already died.
Yep. Yeah, the insured's estate. Because he didn't put the kids as beneficiaries, contingent beneficiaries. So
When a reduced paid up non forfeiture option is chosen, what happens to the face amount of the policy? The reduced paid up non forfeiture option. See, the non forfeiture ones I am not confident about. It remains the
reduce
same
paid
as
up.
the
So it
original
reduces the
policy.
coverage, but it's paid up till age 100. So it remains the same as a original policy. No, it's reduced. It decreases over term. No, it is increased. No, it is reduced amount. There you go. So
Okay, yeah. So
reduced
anytime
paid
we
up
should be
means that the
looking.
coverage gets reduced, but it's paid up till age 100. Go ahead and screenshot that.
Okay, yep. What of the following is true about a class destination? So no beneficiaries must be part of the insurance immediate family. Beneficiaries are not
That
identified by
means
name.
class designation means that they're not identified by name. Like for example,
Yeah,
all children equal shares. For
I
example.
remember that as soon as I saw the answer choice.
Okay.
Which of the following applies to the 10-day free look privilege? Is that after the fact or hold on? Okay, premature return the policy for refund premium paid. It allows insured 10 days to pay initial premium. It can be waived only by insurance if granted only option to agent.
It's gonna be A.
Parents will
So
attend-
10 day
Hey, yeah.
period.
That's
And
when
guess
they
what
that's when
they're
they
gonna do with
first
this period? It's weird. Did they change it? I don't know, but they might have changed it because it's always been 10-day
And
free
30, right? Oh yeah, free look, yeah.
free look period. But right there, you see how it says at the end privilege, free look.
Privilege, yeah.
So I guess it's the same thing. Free look period. It says period down here. It says privilege up
Yeah.
here. So just keep that in mind, okay?
hmm The insurer and his wife are both involved in a head-on collision. The husband dies instantly and the wife dies 15 days later. The company pays a death benefit to the estate of the insured. This indicates that the life insurance policy had what provision? Accidental death, second death, common disaster.
Common disaster clause. Are you able to screenshot everything? It's
Yep.
kind of almost doesn't fit.
Who can request change in premium payments, face value loans, and policy plans? The policy owner?
Yes, the policy owner is the only one that can make changes and coverages like that. So, yep, it's the policy owner. Good job.
A couple owns a life insurance policy with a children's term life. Their daughter is reaching the maximum age of dependent coverage, so she will have to convert to permanent insurance in the near future. Which of the following will she need to provide? Proof of insurability. Her parents will, because she would have to put it at her new age, right? With the new physical. Her parents will context receipt, medical exam appearance, and medical history, medical exam. I would think she would need an updated one.
Well, it's she's grandfathered into the policy, so she's not gonna need to do medical exam or proof of insurability. It's done.
Okay.
Yeah, because she got it when she was younger. So when she's older, she could get an adult policy without doing the whole medical exam. So
Okay. A rider that may be attached to a life insurance policy that will adjust the face amount based upon a specific index, such as the consumer price index, is called the living rider and cost of living rider. So benefit rider. Yeah, see the different types of riders threw me off too in one of the chapter things. So I'm not confident with this one either.
yeah, so this one is a consumer price index. This is not the same thing as a index universal life or index variable. You know what I mean? This is different. Or index annuity. This is talking about the consumer price index, which is inflation, cost of living, inflation, consumer price index. So
Okay.
you have to get them all together, connect them all together, okay? Consumer price index, cost of living, inflation, it's all the same thing, okay?
Okay. An absolute assignment is a transfer of ownership. Policy change of beneficiary transfer of ownership and policy change of insurer. Is either C or B. I mean C or A.
Absolute assignment is transfer of all rights. It's A. Absolutely. So you think of the word absolutely everything. You see what I mean?
Okay. Yep.
So it
Absolutely all
transfers.
of it.
Yeah, absolutely all of it. There you go. Perfect.
An insured owns 50,000 whole life policy at the age of 47. The insured decides to cancel this policy and exercise the extended term option for the policy cash value, which is currently 20,000. What would be the face amount of the new term policy?
So extended term keeps the face
Eh,
amount the same, but
Yeah, I'm about to
it
say it'd
ends.
still be the 50.
Yeah, but it ends eventually because it's a term now. The other non-forfeiture option is called reduce paid up. Remember, reduce means it reduces the coverage, so it would be less than 50, but it's paid up to age 100.
Okay. Which is true about the cash surrender non-forfeiture option. Policy remains active for some time after the policyholder opts for cash surrender. After the cash surrender, the insured is covered for a grace period of 1 month. Policyholder receives the original cash value of the policy and thinks the funds exceeding the premium paid are taxable as ordinary income. Um, it's C, right? Cash surrender, the insured is covered for a grace period of 1 month. No.
Cash surrender, non-forfeiture option. Cash
Back to
surrender,
person time and
non-forfeiture option.
okay,
Cash
surrender.
surrender means that after surrender, uh, policy up for cash surrender. The policy remains active. No, the policy receives original cash funds, exceed premiums are taxable. I think it's D. Yep. So basically, they get whatever is the face amount. C is wrong because you don't get the original cash value. You get whatever's in the policy. What is a cash? It's called a cash surrender value. Is what you get.
You said they only get whatever is what?
You get whatever cash value is left over.
Okay,
That's called cash surrender value. Cash surrender value. Right here, I don't see cash
okay,
surrender value, but it says cash surrender non-forfeiture option. Well, you're gonna get the cash surrender, but the reason it's D is that's an extra detail. It says for exceeding premiums paid are funds exceeding the premiums paid are taxable as ordinary income. So what it's saying is that if you paid in premiums $10,000 and the funds are actually $11,000, then you're gonna have to pay taxes on that $1,000 difference.
okay,
It's called a cost basis.
right. So then you just get afterward. Okay,
That's basically what it was saying.
awesome. No, I was just putting it full circle for myself to remember it. Which of the following is an IRS qualified retirement program for the self-employment? Smooth Tyler, 401k?
Uh, Self-employed. It's gonna be a Kiog. This is a small part of the test.
I must say, I've never heard of this.
I know, yeah, but so just think of this: Kiog, self-employed; Kiog, self-employed; Kiog, retirement plan, self-employed; Kiog, retirement plan, self-employed.
Okay. Most agents try to collect the initial premium for the submission with the application. When the agent collects the initial premium from the application, the agent should issue the applicant a backdated receipt warranty the premium receipt statement of good health. C, if
Um,
they made that actual purchase of it in the same day, premium.
I like that. That's good. Yeah, good job. There it is. I was thinking D too, but that's after the policy is issued.
The full premium was submitted with the application for life insurance, and the policy was issued 2 weeks later as requested. When does the policy coverage become effective? As the policy delivery dated? Oh, wait, as the first amount of the policy issued as policy issue. The policy issue date?
Yeah, I think so too.
Oh, so
Patient.
it was
Wow.
the application date? That don't make sense to me. Let me
Because
screenshot that.
yeah, it says the policy was issued as requested. Policy coverage becomes effective will generally coincide with the date of application. Because money was submitted, I guess. Yeah, this was strange.
They submitted money when they applied, but what if they didn't get approved if it's an application?
Yeah.
Okay. Which of the following terms is used of the name non-tax return of unused premiums? Dividend surrender. Is it surrender premium returns?
Yeah, dividends is a refund
Oh,
of
let it go,
unused
let it go.
premiums.
All the following general requirements for qualified plan accept and must provide the offset of securities benefits. Oh, wait. All the following general requirements of a qualified plan accept. It must be for the exclusive benefits of employee and their beneficiary. And must be permanent, written, and legally binding. The plan must be communicated to all employees and must provide the offset for Social Security benefit. I think it's A. All the following are general requirements. So I don't think I remember seeing A being part of that. Sorry, excuse my noise.
I don't know.
Yeah, see, hey, haha.
Yeah, good job. Accept. Ah, I missed the accept part.
If a company has simplified employee compensation plan, what type of plan is it? Qualified plan for small businesses, an ununified contribution of a large business, the same as an hourly. Yeah, I did not know that one.
So this is a
So,
SEP IRA. It's for small business owners. It's crazy that they're asking you these questions. This is more like really doesn't have a lot to do with life insurance, but oh well.
right, that's what's throwing me through the loop. Like I said, it's like I'm scared. What is the primary
401k
purpose
is
of
retirement.
401k? Yep, retirement. That
Screenshot.
was a good easy one. Any such a company employee must be taken.
It's either 100 or 0. It's 100. There it is. Save that. So non-contributory is 100% must take part. Interesting.
Non is 100%.
Yep. So it's the opposite. Okay,
Okay.
just remember that.
The premium paid employee business life insurance policies are tax deducted by the employer.
Oh, year. Yeah, because they're the
Yeah.
ones
Okay.
that are putting in money, so it's gonna be tax deductible by the employer.
403. I don't know nothing about that. Hold up. I don't even think I've seen it available to be used.
Self-employed, postal employees, government workers, teachers, nonprofit organization. So it's
Teachers and
403Bs are for nonprofit,
okay. So I've never, I mean,
churches,
I've seen it when
charities.
filling out a form, but I don't know what that is. Which of the following instances would the premium be tax deducted? The individual has her premium paid, premium is paid, mother premium paid, employee 3,000 insurance plan of employee. Yeah, the employer thing. Yep. You just
Right?
covered that phrase differently. 246. An employer quits his job on May 15 and doesn't convert his life insurance under for 2 weeks. He dies in free accident June 1st, which of the following statements specifies what happens. It still covers him because he only died.
I think it's a 30-day period.
Right. So it's still covered, right?
Yep. Oh, the beneficiary will, the insured will pay the full
Well,
death
yeah.
benefit from the group policy. Oh, I thought it was
The
a
insurer.
on top of that. Yeah, the
Oh,
insurance company. So you're right. I chose C because I thought there was a monthly premium still needed to be paid by the client, but nope.
the insurer issued a policy based on an application that had an answer question which of the following would be true. Policy would be void. Policy would be interpreted as the insurer waived his rights. Policy would interpret that the insurer did not have an answer, whereas the insurer would deny coverage. I think it was B.
Yeah, good job.
Yay! Simple plans require all the following except, okay, employees must receive a
Oh,
minimum of 5,000
too
annual
little.
compensation. No other qualified plan can be used. No more than 100 employees, at least 1,000 employees.
I think it's D. Yeah,
A simple
it's only for
business.
100
Okay.
employees. It's for small businesses also.
Yep. I was about to say it's for the tiny one, right? When it says except, okay, I'm sure this has a surrender is 100,000. So the payments paid into the policy added up to 15,000 that policy surrender cash surrenders. What part of the surrender value would be an income taxable?
See that? Only the amount. So 15,000 was the premiums, 18,000 was the cash value. So there's a $3,000 gain. So you're gonna pay taxes on the gains.
Okay.
Oh, we missed a lot of them on this one, but we passed.
Just by here. Thank